Well, g'day there, everybody. Thanks for joining me on this Monday afternoon market recap. I will say before I continue any further that we do have approximately 30 minutes left in today's session. The markets themselves are more or less beginning to move sideways. It looks as though at least the intra-session highs have been priced into the market already. And the question becomes, well, are we going to close the gap that we have just established collectively across the board in the US markets between that of Friday and also that of today's session? We began the week's worth of trade today with a very strong gap to the upside on the back, of course, of that news that the US and China trade tensions have been put on hold for at least a little bit of time into the future. The market obviously liked that. And again, we are continuing to see this market move rather aggressively off from these macro strategic support levels all the way down here at 24,250 on the Dow Jones Industrial Average. We spoke about this over the weekend. Really, our outlook for the week ahead was to see most of these gains, or at least some of these gains, more or less be digested back into the market. We weren't really expecting that of a very strong week over what is now the upcoming 4 sessions. We did see, again, the gap to the upside. So what this makes me believe is really based off not only the gap that didn't see this type of Morobozu candlestick like we developed on Wednesday of last week, that we may be setting up for the market to more or less come on back down and to definitively, and I will repeat this, definitively close its open window that we have just established down around 25,500 on the industrial average. And again, if I bring up the S&P 500, you can see it sitting here just above 2,750. Similar type of candlestick, another little bit of a spinning top there on the S&P 500. And again, if I zoom out and show you this on the Nasdaq, we're coming back up to where we were very early on in the period of November, back to where this resistance area is lingering around 7,500 on the Nasdaq. You can see that we've already pushed away from it ever so slightly. We're back down at 7,422 as at this recording, but overall we are still up just over 90 points from where we were or where we closed at on Friday. So overall, just to put this in perspective for you, we're still looking at this market in due course coming back up into its respective resistance areas. This is collectively across the Nasdaq, the Dow, and the S&P 500. However, given today's gap being Monday to the upside, and to see these dark candlesticks or at least spinning tops develop during the intra-session movement, it makes a lot of sense that we may set up a type of resting pattern, i.e. some form of a little bit of a bull flag, for instance. That's really what I'll be paying attention to, really Tuesday, Wednesday, and Thursday, which will essentially come on back down, hopefully in a controlled manner, all right, over a number of sessions on relatively low volume from Tuesday. And then what we'll look for is, if I can bring up these exponential moving averages, is to begin to see potentially the 10 or the 20 EMA, depending if we hold on up above it for a number of sessions, to actually act as support as we see the market pull on back down, again, hopefully in a controlled manner, which is going to set up that of another higher low relative to where we were in the month of November. That's essentially what you should be looking for. I wouldn't be all that excited if you're looking at this market popping and continuing its run above what has been Monday's intra-session highs. I think that is a little bit unrealistic at this particular time, but overall we are still overwhelmingly bullish on this market. We are looking for higher prices, but you really just need to be patient and understand that we've already really moved quite a distance over the past 1.5 weeks. We've moved from 24,250, as I alluded to a little bit earlier. We're all the way back up, almost very close to 25,800. I believe we tagged this intra-session today. And again, relatively speaking, the same is true for the S&P. We've moved from 2,625. We got very close to 2,800 today. I think we tagged it as well. Currently trading already at 2,783. So this movement here, although it has been, again, very profitable, if you jumped into the SPYs at 2687, or even on the diamonds at 24928, or if you use the Dow Jones Industrial Average as the contingency order, these positions, I just moved my support area, let me undo this, are already very profitable. But again, you just need to allow the market a little bit of wiggle room to at least come on back down. I do believe it is going to close these windows. So a lot of the gains that we have printed during Monday are most likely short-term going to be given back. But look for those exponential moving averages to hold this market up. If I bring up the the oscillators, you can still see that they're all supporting the market movement higher, getting a lot of bullish crosses collectively across the board. This is on the daily time frame, switching now into the S&P 500. And most importantly, interestingly enough, more so than what we're seeing on the oscillators, is that during this bullish move, the ADX is trying to turn on back up. In my opinion, this isn't going to be a definitive signal, not until the ADX comes back down and begins to rest, which I think will set up once we set up that bull flag. All right, and once we give the market a couple of sessions to actually rest, we should see this ADX turn on back down and move towards the resting line. It doesn't necessarily mean we have to move all the way down there. However, if you see this occur, and then when you see that white candlestick in due course, I don't think it's going to show up on Tuesday. It's probably going to show up towards the back end of the week. That's going to be the continuation signal, all right, most likely setting up through a bull flag or even potentially that of a stair-step pattern as well, which I haven't said until now. But these are the types of scenarios that you should be looking out for as a technician, or at least as a swing trade technician. A lot of people now are starting to connect the dots. They're either calling this a double bottom, all right, or sort of a reversal pattern, which is technically somewhat correct. I don't really like the location of it. I mean, it's not really a true double bottom. However, it does take the formation of it, and as you can see, it prints the W. The W, of course, stands for winner, which means higher prices too. So, I mean, everything's looking good on the markets. It really, really is, except just keep, of course, reality in perspective. This isn't, in my opinion, just going to rocket up to 2875, for instance. It would be really good if it did, but it's just generally not the way these types of movements play out. Now, if I move into a bunch of individual companies very quickly, we've got Apple still yet to trigger above 185.58. I'm expecting this, if the market does pull on back down, to come potentially down to 175. If not, it may overshoot it and come all the way back down to 167. If there is a flush out short in Apple, this is going to be probably the most opportunistic time to enter into Apple long. It's going to, I mean, we're simply going to have to sit on our hands for now and see whether or not it actually plays out. But that is still a realistic sort of target, given, of course, the open window dating all the way back to May 2018. So, again, not something you need to act on immediately. I do think we are going to see a little bit of a pullback, but that pullback is not going to be a continuation of that larger correction that we have been in since September and also October. Now, going back into Amazon, you have a question here. There are some pretty massive profits here, really, on Amazon. 1561 was the long entry. Okay, we're all the way up at 1763. All right, so there's over, I mean, there's some serious cash there in this Amazon swing trade, over 200 of intrinsic value already. Again, a lot of emails flowing in today, registering or at least acknowledging a lot of these open windows. And again, everything I just spoke about in terms of the indices themselves are applicable to these individual companies as well. It looks as though, again, the dynamic has shifted. The sentiment has shifted. We're seeing a very abrupt sort of bullish movements, but these gaps that you print, they're not good for price action in terms of the movement continuing immediately. All right, given certain locations and particular instances or locations on charts, it can be an immediate sort of upside move where you don't close the window. However, in this particular instance, based on what the markets have done and also these individual trades, you can almost guarantee that Amazon's going to come back down and retest 1,700 from the top. So really what you're looking at is about a $63 decline off from my current price on Amazon to close this window. And again, you want to see this happen in a controlled manner, hopefully on lower volume as well. If this happens, wait for that one white candlestick to set up as the ADX most likely is back down towards the resting level. And then that's going to be your entry to position yourself in Amazon. We spoke about this over the weekend. Wait for resistance to develop on a couple of these stocks. That is exactly what is happening as at the close on Monday or leading into the close. We're starting to see these sort of shorter term exhaustion movements that are going to really just needed to, or what we'll need to do anyway, is just give it a little bit of time to sort of breathe and to rest. And then, of course, we can just continue with the movement once the market is more settled, really. Boeing Airlines, again, gapping up to resistance, dark candlestick, wait for it to close the window. I think you can see a theme developing here. Now, the one outlier really at the moment was Baidu. Baidu triggered at 190, okay, during today's session. It is a dark candlestick. We've spoken about this sort of hypothetically. This is most likely at the moment, based off today's candlestick and based off the market indices, it's probably going to get stuck between where we're currently trading at and 185. So that's the reality we're looking at with Baidu. It's not something to jump out of necessarily, all right, whatsoever. But the odds of this just breaking out are pretty slim at the moment. It looks as though we are going to have to base a little bit longer before we see that real move back up to 227 or all the way ultimately up to 245 as well to close this window dating back to the first trading session of August 2018. So there's a lot sort of under the hood happening with individual stocks, and it is somewhat still paralleled very nicely with the markets. Just think about that as we continue. We've got Caterpillar, again, back up at resistance, no trade there. COP is continuing, which is very good. Both of those trades are profitable. CVX, we're not in the trade. Google is probably the second best stock that we've been in. after Amazon. Original entry 1067. We're trading up at 118. Okay, but we've got that dark candlestick as well. Less of a open gap to close, which is good, but we are getting close to resistance. You can just hold on to this, or if you really wanted to, all right, by all means, you can always bank some of that profit, put it in your back pocket, and wait for that next opportunity to re-enter, as I've already sort of described to you, i.e. with those stair-step patterns, all those bull flags, which I do believe are going to set up as we come on back down and close those windows. We've got also IBM. I believe this is the last stock that has triggered above 122. We're only trading at just shy of 125, a little bit of a profitable move there. But again, allow it some time. Understand that the market most likely will pull back to digest some of these recent gains over the past 1.5 weeks, which is natural. And then, of course, we'll look to re-enter into positions, okay? Now's not the time to be going long necessarily, as at the close on Monday and moving into Tuesday, especially if you see the market pull on back during Tuesday's session. Netflix, no trade here. If this pulls back and then begins to develop a secondary base, this dashed line, we're going to, over time, make it default, and this is going to be the perimeter break, which will most likely be the confirmation to take us up to 335 all the way up, ultimately back up to $400 per share. For Netflix and Tesla at the moment, we haven't really done anything on this stock in about a month, or really a month and a half now. We're waiting for the right time. If this continues, we should move into a Bollinger Band squeeze. You can see we're sort of already doing that. However, we're back at very close to very important highs, and we're also potentially seeing a little bit of a false break to the upside at the moment, given what the market has done during Monday's session. So that's going to do us. I don't want to make it not so much complicated, but all too much detailed. Again, if you have any questions, email me, success@pivotpoint-trading.com. If not, jump into that pro class. You can go back and watch the analysis that we went through over the weekend on Saturday, about 90 minutes long, with a lot of in-depth analysis when it comes to the indices and also individual trade setups, how to actually analyze stocks and set trades up for the week upcoming, which we follow along with here on the YouTube channel as the week unfolds. So on that note, everyone, enjoy your Monday evening. I'll be back with you later in the week for another market address. Farewell.